Welcome everyone to Unit 10 of the AAA module. I'm Eleanor, one of your AAA module leaders. This is a short video to give you an overview of what's covered in Unit 10. Unit 10 covers the following key topics: audit opinions, types of audit opinions, the auditor's report including form and content of an unmodified auditor's report, form and content of a modified auditor's report, and additional paragraphs in the auditor's report, including what gives rise to those additional paragraphs and when to include them in your auditor's report. So let's get started by briefly outlining the difference between the auditor's report and the audit opinion. At the end of the audit, the auditor issues the auditor's report to the client. For users of the financial statements, the auditor's report is the most important part of the audit. It is the only part of the audit they see and is used to gauge the reliability of the financial statements. It may be useful to show the distinction using an extract of an illustrative audit report adapted from ISA 700 revised. You can see the document is titled Independent Auditor's Report. At the end of an audit, the auditor forms an opinion on the financial statements. The written auditor's report issued at the end of the audit contains an audit opinion on whether the financial statements have been prepared in all material respects in accordance with the applicable financial reporting framework. In the extract on the slide, you can see the audit opinion sits as the first paragraph on the independent auditor's report. To form the opinion, the auditor must consider if they have obtained reasonable assurance on whether the financial statements as a whole are free of material misstatement, whether due to fraud or error. To do this, the auditor needs to consider a series of questions. These are listed here and in your candidate study guides. Now, let's move on to the different types of audit opinions. Here is a decision tree that illustrates the types of opinions expressed by the auditor. Most audit opinions are unmodified or clean. An auditor expresses an unmodified opinion when they conclude that the financial statements are prepared in all material respects in accordance with the applicable financial reporting framework. If the auditor cannot issue an unmodified opinion, he or she issues a modified opinion. When the opinion on the auditor's report requires modification, the decision on which type of modified opinion is appropriate depends on the nature of the matter and the auditor's judgment about the pervasiveness of the effect of the matter in the financial statements. Now, let's briefly talk about each type of modified opinion. An auditor will issue a qualified opinion when he or she concludes that the financial statements contain a material but not pervasive misstatement, or when he or she is not able to obtain sufficient appropriate audit evidence regarding a matter or matters which may result in a material but not pervasive misstatement in the financial statements. An adverse opinion is issued when the auditor concludes that misstatements are both material and pervasive to the financial statements, or when, in the auditor's judgment, management's use of the going concern basis of accounting in the preparation of the financial statements is inappropriate. A disclaimer of opinion is issued when the auditor is not able to obtain sufficient appropriate audit evidence to provide a basis for an opinion, and the possible effect on the financial statements is both material and pervasive. The following table summarises the circumstances under which a modified opinion is issued, and I'll now briefly cover the concepts. You might recall that a material misstatement is the difference between the reported amount, classification, presentation, or disclosure of an item in the financial statements and the classification, presentation, or disclosure that is required for the item in accordance with the applicable financial reporting framework. The auditor's inability to obtain sufficient appropriate audit evidence, also referred to as a limitation of scope, can result from a variety of circumstances. Those might be beyond the control of the entity, for example, when the entity's accounting records have been destroyed. They might be relating to the nature or timing of the auditor's work, for example, when the timing of the auditor's appointment means the auditor can't observe the stocktake, or other limitations imposed by management. Whether the misstatements or the effect of the auditor's inability to obtain sufficient appropriate audit evidence is pervasive or not is a matter of professional judgment. There is no quantitative guidance to determine what is pervasive. It is the audit partner who would be making this determination. The auditor's report is issued as the final step in the audit process. The audit opinion is a major component of the auditor's report, and as I've shown you before, this is presented first. The auditor needs to ensure that the correct opinion is included in the auditor's report based on the results of the audit work performed. The appropriate form of the auditor's report is determined by the applicable financial reporting framework, the applicable auditing standards, and legal and regulatory requirements. In forming an opinion, the auditor needs to evaluate whether the financial statements are prepared in all material respects in accordance with the requirements of the financial reporting framework. The financial reporting framework can be further classified as either fair presentation or compliance frameworks. The AAA module focuses on a fair presentation framework. The auditor reporting standards refer to the auditor, and in practice, this refers to the audit partner as they are the one responsible for the opinion. As the consequences of the auditor issuing an inappropriate audit opinion can be significant, where a modification to an auditor's opinion is necessary, it is the audit partner that makes the decision regarding the audit opinion and the auditor's report that should be issued. The audit partner is likely to consult with an independent partner in reaching this decision. I'm going to now provide you with an overview of the key elements of an unmodified auditor's report. First, you'll see that at the top of the auditor's report states that it's an independent auditor's report, and then the auditor's report is addressed to those for whom it was prepared. It is then followed by the report on the audit of the financial statements, and as we've stated before, starts with the opinion. We then have the basis of opinion, and this must be placed directly below the opinion section. The basis of opinion includes a reference to the applicable auditing standards and ethical requirements. The key audit matters section must be included in the auditor's report for a listed entity. Key audit matters will be discussed in more detail towards the end of this overview. The other information that may be required, and also will be discussed later in this overview, is then discussed next. The section of this heading is modified to reflect the responsibilities for the preparation of the financial statements and the oversight of the financial reporting process. This may be management, those charged with governance, and/or directors. We then describe the auditor's responsibilities for the audit of the financial statements. This is tailored to reflect the specific nature of the entity, for example, when the auditor's report addresses consolidated financial statements. The report on other legal and regulatory requirements section of the audit reports varies depending on the nature of the auditor's other reporting responsibilities prescribed by local law, regulation, or national auditing standards. Finally, the auditor report ends with the signature of the auditor, the auditor's address, and the date the audit report is signed. And remember, check your country-specific requirements as it pertains to the auditor's report. Where the auditor modifies the audit opinion, certain elements of the auditor's report will also be modified. Some of these are highlighted below. When the auditor modifies the audit opinion, the headings Qualified Opinion, Adverse Opinion, or Disclaimer of Opinion must be used in the opinion section of the auditor's report. When the auditor modifies the opinion, the auditor must also amend the heading of the Basis for Opinion section to Basis of Qualified Opinion, Basis for Adverse Opinion, or Basis for Disclaimer of Opinion. In this section, the auditor will also include a description of the matter giving rise to the modification, and the wording of the section depends on the reason for the modification. We'll now talk through 2 additional paragraphs in the auditor's report, the emphasis of matter paragraph and other matter paragraphs. An emphasis of matter paragraph highlights a matter that is appropriately presented or disclosed in the financial statements, which, in the auditor's judgment, is of such importance that it is fundamental to the user's understanding of the financial statements. The emphasis of matter paragraph can be added to, but not replace, a qualified or adverse opinion or disclaimer of opinion. And an other matter paragraph refers to a matter other than those presented or disclosed in the financial statements, which, in the auditor's judgment, is relevant to the user's understanding of the audit, the auditor's responsibilities, or relevant to the auditor's report. Where a matter is included in the auditor's report as a key audit matter, it is not included as an other matter paragraph. When the auditor is forming an opinion, including emphasis of matter or other matter paragraphs in the auditor's report, this diagram, which is on page 1017 of the CSG, may be useful. The auditor first determines which opinion is appropriate for the engagement, unmodified or modified. Once they have worked through the next part of the diagram, the auditor needs to determine whether they have identified any matters that, although appropriately presented or disclosed in the financial statements, are of such importance that they are fundamental to the user's understanding of the financial statements. If so, an emphasis of matter paragraph would be appropriate. The auditor would then move on to determine whether they have identified again a matter other than those that are presented or disclosed in the financial statements, that is, in the auditor's judgment, relevant to the user's understanding of the audit, the auditor's responsibility, or the auditor's report. If so, an other matter paragraph would be appropriate. Now, there are certain reporting implications for initial audit engagements, and those are covered on page 1018 of your candidate study guide. We will now cover the Key Audit Matters section of the Auditor Report. The Key Audit Matters section is mandatory for listed entities. Key audit matters are the areas of an audit that the auditor views as being the most significant. There are various factors influencing the determination of key audit matters, and those factors are listed on page 1018 and 1019 of your candidate study guide. These are the levels of risk of material misstatement, the significance of an issue, the level of judgment required by the auditor or by management, the significance of the transaction or events, matters posing a challenge to the auditor or significant effort, communication, consultation, and other issues identified during the audit. For listed entities, issues related to going concern are key audit matters by nature. However, these are described in a separate section of the auditor's report. The key audit matters section would include a cross-reference to the section where going concern issues are described. I'm going to now give you a brief overview of how key audit matters are presented in the auditor's report. Key audit matters are presented and described under a separate section in the auditor's report titled Key Audit Matters. The description of a key audit matter is intended to provide a clear and succinct explanation to the users of the financial statements to enable them to understand why the matter was significant in the audit and how it was addressed. Given the level of judgment required, in practice, the audit partner determines what the key audit matters are. If key audit matters are included in the auditor's report with a qualified or adverse opinion, the auditor's report may also include a key audit matters section. If an auditor disclaims an opinion, the key audit matters section is not included in the auditor's report because of concerns that communicating key audit matters would suggest that the auditor was able to conclude on these matters. The auditor's considerations about the appropriateness of management's use of the going concern basis of accounting were discussed in earlier units. Unit 10 considers the implication of those considerations for the auditor's report. All auditors' reports also include a statement that it is the auditor's responsibility to conclude on the appropriateness of management's use of the going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists relating to events or conditions that may cast significant doubt on the entity's ability to continue as a going concern. If the auditor concludes that management's use of the going concern basis of accounting is appropriate and no material uncertainty exists, they would express an unmodified opinion. However, if a material uncertainty does exist, the appropriateness of its disclosure in the financial statements has implications for the auditor's report. The table on the slide summarises the implications for the auditor's report, and you can find this table on page 1022 of your candidate study guide. The auditor's responsibilities relating to other information, for example information in an annual report, were discussed in Unit 9. The auditor must include a separate section with a heading Other Information or other appropriate heading when, at the date of the auditor's report, for an audit of a listed entity, the auditor has obtained or expects to obtain the other information. For an audit of a non-listed entity, the auditor has obtained some or all of the other information. If the auditor's opinion is modified and the auditor's report is required to include an other information section under ISA 720 revised, the auditor must consider if the other information is also misstated because of the same matter that gave rise to the modification, or if the other information section must otherwise be modified, for example, due to a limitation of scope. If an auditor disclaims an opinion, an other information section is not included in the auditor's report. We have now covered the key topics of Unit 10. We've covered audit opinions, the types of audit opinions, the auditor's report, including the form and content of an unmodified auditor's report, the form and content of a modified auditor's report, and additional paragraphs in the auditor's report, including what gives rise to those additional paragraphs and when to include them in the auditor report. If you have any further questions regarding Unit 10, please post them on the discussion board. Thank you for watching this video. Look out for other overview videos for the other units in the AAA module. We wish you all the best in your studies.